How to spot costly loan estimate mistakes, Part 2. If you don't understand page 2 of your loan estimate, you could lose thousands in surprise fees at closing. But don't worry, in this video, we'll walk you through everything on page 2 so you can spot hidden costs, negotiate smarter, and save big when getting your mortgage. Loan costs, what you must know about mortgage fees. First up is the section called loan costs. You'll see it's broken into parts A, B, and C, and the total of those makes up part D, your total loan costs. Origination charges, costs to start your mortgage. Now, part A is origination charges. This includes the lender fees, broker fees, underwriting, and processing fees, basically, the fees you must pay to create the loan. Sometimes, you'll have an option to pay extra points, that's extra upfront money, to lower your interest rate. For example, you might pay 0.5% of your loan amount upfront and reduce your interest rate slightly. Sounds good, right? But be careful. Buying down the rate isn't always a smart move. I'll cover that more in a separate video, so stay tuned. Besides that, you might also see processing fees, broker fees, and in some special loans, even a loan fee of up to 2%. Services you cannot shop for, fixed required services. Now let's move to part B. These are services you cannot shop for. The lender picks the provider for you. These usually include appraisal to value the house, credit report to check your credit, flood certification to see if the home is in a flood zone, and tax service fees to confirm if there are any unpaid property taxes. These are standard and required, you can't shop around for cheaper options here. Services you can shop for, a chance to save. Next is part C, the good news. These are services you can shop for. It includes your escrow company, title insurance provider, and notary fees. Escrow is basically a neutral third-party company that holds documents and funds for both the buyer and seller, or between you and your lender. They make sure no money changes hands until everything is ready. It's a safety net to protect both sides in the transaction. Then we have title insurance. This protects your ownership rights to the home. If someone later claims they have a legal interest in the property, like an unpaid lien or an error in public records, title insurance steps in. It covers your legal fees or even reimburses you if needed. Without it, you could lose the money you invested. Because you get to choose, prices can vary a lot. If you shop smart, you can seriously cut down on your closing costs. Always get quotes from different companies and negotiate. Other costs, additional costs you shouldn't ignore. Beyond the basic loan fees, there's another category called other costs. These include taxes and government fees. Recording fees when they file your home title with the county. Also, transfer taxes, usually paid when the home changes owners. If you're buying a house with a loan, sometimes the seller covers this, but not always, double check. Prepaids, costs before you even move in. Now let's talk about prepaids. These are upfront payments you need to make before moving into your new home. They usually include homeowner's insurance for the first year, property taxes, and prepaid interest, which is the interest covering the days between your closing date and the end of that month. For example, if you close on April 9th, the lender will collect interest from April 9th to April 30th. That means your first full mortgage payment will start in June, not May, because May was already covered up front. Let's take property taxes, for example. In most places, they're paid twice a year. Now, say you're closing in September, but the next tax bill is due in November. That means the seller already lived in the home from July to September, so they owe you their share of the taxes for those months. You'll see a credit from them on your final closing sheet. But let's flip it. If you close after the due date, say in December, and the seller already paid the full bill, then you'll need to reimburse them for your portion. That's a debit to you at closing. It all depends on your exact closing date, and your escrow or lender will calculate that to the day. If there's ever an overpayment, the county usually refunds it, so don't worry, that money doesn't disappear. And here's something many buyers miss, you might also get a supplement tax bill. Let me explain. You're buying the home for $800,000, so your annual property tax should be around $10,000. But the seller originally purchased it for $500,000, and their tax was only about $6,000 per year. But at closing, they may still collect based on the old $6,000 rate. Later, the county will reassess the home value and realize taxes should be higher. So you'll receive a supplemental tax bill for the $4,000 difference, because you now own a more valuable property. It's completely normal, but it catches people off guard. So be prepared. Even if your taxes are escrowed monthly, the supplement amount is billed separately, and you're responsible for paying it. This is why it's so important to review your prepaids closely. They can really add up, and knowing in advance will help you plan your budget better. Escrow payments and other negotiated costs. Now, Part G is your initial escrow payment at closing. If you want to bundle your insurance and property tax into your monthly mortgage payment, lenders will set up an escrow account, and you'll pay some money up front here. Then, Part H lists other costs like owner's title insurance. This protects your ownership rights. Sometimes sellers pay for this, sometimes not. Make sure you check your closing documents carefully. Total closing costs, watch out for the full picture. When you add everything together, loan costs plus other costs, you get your total closing costs. And here's where many borrowers panic, wow, why are my fees so high? But remember, not all of it is lender fees. If your closing costs seem huge, it might be because your prepaid taxes, insurance, and escrow payments are stacking up, not because your lender fees are outrageous. If your mortgage includes an impound account, your total closing costs may be significantly higher due to prepaid taxes and insurance. Also, you might get lender credit. If you accept a slightly higher interest rate, the lender might give you money back to offset your closing costs. Look for this under the lender credit section. Calculating cash to close, how much you need to bring in. Let's break down what cash to close really means. It's the total money you need to bring on closing day, not just your down payment, but also closing costs, minus anything you've already paid. That includes things like lender fees, taxes, insurance, and prepaid interest. If you paid a deposit earlier or got a seller or lender credit, those amounts reduce what you owe. Some people choose to roll some costs into the loan. That lowers your upfront amount but increases your monthly mortgage. So, always check this number carefully. It tells you exactly how much cash you'll need at closing, no surprises. That wraps up part 2 of our guide on spotting costly loan estimate mistakes. Understanding page 2 will save you thousands of dollars when buying your home. If you want help reviewing your own loan estimate and planning smarter, reach out, we're here to help. Stay tuned for part 3, where we'll dive into page 3 of the loan estimate and what it means for your mortgage terms. Now we're on to page 3. It shows the name of the lender and the mortgage broker, who's the person helping you apply. Sometimes they're the same, sometimes not. This is where you'll see a table titled "In 5 years." It shows how much money you'll have paid toward the loan within the first 5 years. Stay tuned for the video, How to Spot Costly Loan Estimate Mistakes, Part 3.
Real estate and mortgage broker Danguard, with experience in over 1,000 loan applications and real estate transactions, aims to provide you with useful and general knowledge about this field. For advice on each specific case, please contact via email or website provided below the video. Don't forget to click like and subscribe to the channel to stay updated with the latest information from Danguard.